fact, the markets seem to be pretty stable after the tariff announcement. It's almost like it's water under the bridge already, seeing the recovery that we're seeing in the markets right now. But to weigh in on the markets and how it's likely to shape up going ahead, we're now joined by Rahul Sharma, who is the Director and Head Technicals and Derivative Research at GM Financial Services. Hi, Rahul. Thank you so much for joining us today. Rahul, tell us, look at the recovery that is coming in, after the Trump tariff announcement. It's a strong recovery. It's a good sign as far as Indian markets are concerned. Tell us on the benchmarks and also Nifty Bank, the kind of outperformance that Nifty Bank is showing right now. Really, are we out of the woods? And now from here on, do you see an up move coming in?
Yeah, very good afternoon. So one thing is for sure that the way markets have reacted today, it seems like the markets had already discounted the kind of tariffs that were expected. Point number one is markets were very light going into the series. So from a derivative perspective, the short aggression from FIs or whether the retail positions in index, they were on a relatively smaller scale. Now, what that puts us is on a relative scale, tariffs are something which will impact a lot in the long run. But in the short run, India is a relatively better place, which is the reason why we are seeing outperformance happening in the Indian markets today. Now, Nifty in the last 2 or 3 weeks has definitely come out of the woods, which means that incrementally things may get better from here. Now, there was a period of time where India underperformed the US markets. So in the last 6-7 months, where US markets were hitting new highs, it was India which was under pressure and was seeing outflows regularly from the FIs, and which is why we had this 6-7 month kind of a bear market. I think that should sort of see a reversal of sorts where we outperform the US markets. US markets sort of remain under pressure, and Nifty sort of spend some time, may not fall as much as the US markets, and then eventually once there is stability emerging in the global markets, we may see a possible rally from here as well. So our view is to buy on dips. Nifty is looking good for 24,000 from a positional perspective. At 23,200, 23,300, the risk reward is favorable for longs. So keep a stop loss place around 22,000 on the closing basis, and the view is to go long. Even banking index for that matter is relatively on the lighter side, and we feel that this index is also due for a fresh up move. The working targets are coming close to around 53,500, 54,000 on the banking index. So if you have like a are looking relatively good, and we feel that we should outperform the global markets going ahead.
All right, so when some stability will kick in the global markets, Indian markets too are expected to do better. 24,000 is the positional target. But Rahul, IT and pharma, that's the sector that we have been talking since morning. But after the opening, a lot of these domestic plays, and especially some of the pharma counters, are seen to be doing well. So give us some sense that which are the sectors that are likely to participate even more in this sort of a recovery, what you are anticipating?
Yeah, so tariff-related moves seem to have discount have happened today. We've seen the pharma index open by a big margin, and post that it is seeing a bit of profit booking at higher levels. But overall, the positional setup of the pharma index still continues to be positive. It sort of hovered its way around the 200-day EMA, and now it seems like sooner than later it should begin its uptrend from here. But I think the better trade or the better risk reward is in the Nifty Next 50 space, which is one index which we are tracking very closely. There's one index which has stocks from the market cap of 50,000 crores all the way up to around 2.5 lakh crores. Nifty Next 50 or the Junior Nifty, which is the ETF which is traded on the exchange, is one instrument which we are liking particularly, which gives you a blend of large caps and mid caps to a wide extent. So you could look to invest in this ETF. We feel that the Nifty Next 50 index has got long legs. So if Nifty goes to 24,000, which is around 2 to 3% kind of an up move, this index could actually outperform by 2x kind of a margin. So the index may go up around 6 to 7% as well. So from a medium term perspective, Nifty Next 50 is something that we are recommending to clients. We feel there is a big upside to be had in this. We've already seen a 10% up move over the last couple of weeks in this index, but we feel that another 7-8% up move can be had over the next few weeks.
Right. Rahul, besides Nifty Next 50, I mean, we have spoken about Nifty IT, we have spoken about Nifty Pharma, and of course the impact of the tariffs on the on those two sectors. But talk to us about what are the other pockets of value that you see now that we have understood that one should look at the domestic-facing sectors, the domestic-facing counters. So within that, where do you see value, and what are the sectors that you are looking at now that the dust for the tariff has settled?
Yeah, so banking and financials is one space which continues to look good. We have been bullish about the NBFCs in particular since a long time now, and we continue to remain so. But I think the next leg of rally could happening in the insurance stocks. So SBI Life is one stock that we like at current levels. SBI Life looks good, not only from a short-term trading perspective, but even from a 6 to 12-month kind of a time frame. We feel that the stock can re-attain its previous highs of around 1900. So if you're an investor or trader, you can look to go along on the insurance space. Apart from that, I think private banks continue to look robust. You have ICICI Bank, HDFC Bank, the blue-eyed boys have relatively weathered the storm very well. And now once Bank Nifty goes into overdrive mode, which is target of say 54,000, we feel private banks can come in a big way. So the entire BFSI space along with insurance is something that we are looking to add longs into. And we feel that this is one area where even if there is volatility in the short term, the downsides will be relatively limited. And that puts this sector into a very good high risk reward kind of a situation, a good risk reward kind of a situation where we feel that money can be made over the next few weeks or months.
All right, Rahul, we let you go on that note. Thank you so much for taking the time out and speaking with us and giving us a sense that where do you see Nifty as well as Nifty Bank headed from here on.
If you like this video, then like, share and subscribe to ET Now.